As mentioned earlier, Folkestone is a ASX-listed real estate fund manager and developer, and our whole mantra is all about providing real estate wealth solutions for private clients and select institutions. We offer a range of investment products across different investment categories, different capital structures, and different sectors, more importantly. The business, we've got two parts to the business. One is funds management, and we offer a range of funds that I'll go through in a moment, as well as our direct balance sheet. So we will actually do developments on our balance sheet. A lot of the time they are put into funds and we co-invest with our investors in those funds. We've got a market cap at the moment, depending on where we are today, of circa 155 million. And as mentioned in the introduction, we've got a funds under management of about 917 million as at 30 June. Just moving on, that's just one of our projects that we recently completed last year and is in a fund that's a large format retail down in ALTONA in Western Melbourne. Across the funds management platform, we've got both listed product. Our education trust is the largest owner of childcare centres. As mentioned in the introduction, we've got a A-REIT securities fund, so both of those provide access to property in the listed space. And then in our private market funds, we offer both income funds for investors looking for income, and then we have our development funds for the high net worth investors who are looking for higher returns. The Folkestone Education Trust, that is our flagship fund. As I said, it's the largest owner of early learning centres. We own the real estate and we lease them to 25 tenants, including some of the listed operators, G8 and Affinity, as well as some not-for-profits and other private smaller operators. That fund has performed very well. In the year to June, it was up 35.8% versus the benchmark of 20.2%. Folkestone co-invests in that. We own about 12.8% of the units on issue. And this year we announced as part of the annual results that the forecast distribution will be 13.4 cents per unit, which was up 4.7% on the FY15. It's a very good fund if you're looking for security of income. We've got long-term leases. They're triple net, which means that all of the operators pay all the outgoings. And it's very secure, as you can imagine. We've got high occupancy in all of the centres given the demand for childcare around the country. These are our 4 income funds. They're all closed end, so they're not open for new investment, but it just gives you a flavour for the types of opportunities that we are able to package up when we find the right property. We've got a large format retail anchored by Bunnings in Melbourne, shopping centre in Queensland. The building down on that left-hand side is the Commonwealth Government building in Wollongong, and then the one on the far bottom right is the Tallis headquarters, a brand new building out at Sydney Olympic Park, and they're all performing at or above prospectus forecast. For the high net worth investors, as I mentioned earlier, we like to do development funds. Our most recent fund we put together end of last year. That's performing very well. In fact, we're way ahead of where we thought. We thought we'd probably have only done 140 lots out of the 690 lots. And to date we've sold 240, so the investors now are looking like they're going to get a fund that's only going to go for 3.5 years instead of 4.5 years, and then there'll be an upgrade in the forecast return on equity. They're the sorts of projects we look for. We like the land development market, particularly in Melbourne. It's a lot easier to do down there than it is in Sydney. The planning system seems to be a lot better in Melbourne. Having said that, we do like the Sydney residential market in selected parts. We've just finished this fund. It was a 229 lot or apartment development right next to WESTRYDE station above a Coles supermarket. We went out with an 18% IRR and a 30% return on equity forecast. The investors ended up getting a 31% IRR and a 50% return on equity. We handed all the money back to the investors last month, so that's done and dusted. A very good project. We'd like to do more apartments in Sydney, but the sites are very hard to get at the moment. There's a lot of competition. Our A-REIT securities fund, that's open all the time. It's an unlisted fund, but it pools money from investors, and we go and select the best listed REITs and real estate managers and developers. on the ASX. It's opened for daily applications and redemptions. And as the intro said, it was the #1 fund in the Morningstar A-REIT Australian Institutional Sector Survey for the year ending June 2015. On our balance sheet, we have a number of developments. There's a lot of information there. This presentation's available at the end out at our desk, or we can email it to you. But again, just to give you a flavour of the types of things, we move across the real estate sector. We're not focused on one sector. We've got residential developments, a tourism development, office warehouse, and retail and mixed use. And some of those are sitting on our balance sheet while we go through planning, and we will look to put them off balance sheet into a fund and allow investors to come in and partner with us on those developments. For instance, that mixed use up at northwest Sydney's right opposite a railway station. We're amalgamating the site, about to go through planning, and when it's DA approved, we'll put that into a fund and allow investors to come in beside us as we develop out those 600 apartments. This is just an example, again, how we use the balance sheet. Down at Millers Junction, stage 1 we developed and put into a fund, which is that large format retail centre. Stage 2 is under construction. That is a office warehouse muse. And then stage 3, we're going through planning. We're looking to put a retail development on there with childcare and some leisure activities. So we've been having that on our balance sheet, the land, and as we develop it, we look to package it up into funds for investors. Also going forward, we're looking at a number of different opportunities. At the moment, we've got a couple of residential opportunities in Queensland, New South Wales and Victoria under due diligence. We're very keen on the health and aged care sector, and we've got some projects in due diligence at the moment on that. And that office is, we've been shortlisted to develop the new WorkSafe headquarters for the Victorian Government in Geelong, and we're waiting to hear back as to who will be the successful tenderer. If some of those come off, again, we'll be looking to package up some of those and put them into development funds to have high net worth investors participate with us in those projects. Just in terms of the outlook, we're very focused on where we are in the cycle. It's very difficult out there in the property markets at the moment. There's a lot of competition for sites. There's a lot of competition for assets. There's some pretty silly prices being paid in selected areas. You need to be very cautious. We are very focused on finding good opportunities that we can take out to investors. And as I said earlier, we've got a broad range of projects under due diligence. And that you can see there our focus is eastern seaboard markets, residential land in Sydney, and selected locations in Melbourne and Brisbane. Non-residential is focused on the retail, particularly neighbourhood. We love the social infrastructure area. We're going to do a lot more in the childcare. We've got 400 of them. We've got another 20 under development, and we'd like to do more in that space. And you will see us in the next few months announce our entry into the retirement and aged care sector. And mixed use, you're going to see a lot more mixed use projects like our one at WESTRYDE, where we had the Coles at the bottom and residential above that. So on that note, I'll finish up, and thank you for attending this afternoon. And as I said, we've got our stand out there, and be happy to talk to you about Folkestone, some of our funds, or if you just want to talk about what's happening in the market, our people are available to talk to you on that. Thank you.